Well, I'm going to take the safety trade to the next level for you guys. Joe and I have been doing some research and trying to figure out how to put this into perspective along with the box that is already in the forum under Charter School. All right, there's a well-known pattern that, if applied properly, can give us major insight into the safety trade. That pattern is the AB CD pattern. A lot of you have heard of it. It's been around. I didn't invent it. It's been around forever. But here's the thing about the AB CD pattern. Most of the people that take it, they just keep pulling, oh, ABCD over and over again. And that's, in fact, wrong. The edge that we have in this group, and the edge that I feel I've given you, is that you understand where the cycle starts into a peak formation. So if going into the peak formation, the A becomes the peak, the B becomes 1 times ADR, the C is the stop hunt or pullback from the high of the day or low of the day, and then you project the D area on the chart, right? Well, we know that the ADRs have been quite high lately, and we know that, here, let me grab a pen. All right, look, so the A, all right, the A has to be your peak formation right here. All right, in this example, it's a peak formation high. And understand that this is an oversimplification. It's going to come in, double top. If we take 1 times ADR, and when we subtract these fib numbers from, in this example, yesterday's low, we can have a rough idea where this C point will go off. Okay, now understand it's more complicated. We got our consolidation, right, in the box, and then we got our move, our breakout into the high, and then the reversal down here into the end of the day. And then, of course, we know it's going to end the day like this in most cases. So now, understanding my methodology applied to a pattern that's been around forever, we can get a rough idea of where the C point, stop hunt, will occur. Right? In this example, it's a stop hunt high, drop, and in this example would be a stop hunt low, rise. Okay, now, a lot of you have been asking me about this, and I think it's already in the forum. Joe can verify that. We created a box alert where a close inside the box will give you a line. It's better than the chin alert where that's a line. We're drawing an area on the chart, a range, if you will, of where we expect the leg of the safety trade to go off. Now, if you're looking at 6 pairs and you have 3 or 4 possible safety setups, you could simply draw the box around this area encompassing the 50 and the 618, and that will give you a good, deep stop hunt area to pick off these safety trades and grab the CD extension. Okay, now look, you guys know I'm not a big fan of the fibs. I'm not crazy about this stuff, but after going back and doing the research, it's undeniable that price comes in a lot of times to the 618, 50 to 618 area for the safety trade. So what can you do with this information? Well, you can project tomorrow's area today, tonight. At 5 o'clock when the market closes and price goes into consolidation off of the low or off of the high, in, let's say in here, you know that you expect a retracement of this AB leg to signal the safety trade somewhere between the 50 and 618. Why the 618? I don't know why, but it shows up more often than not. It's been called the golden ratio. Some of you may have heard that. The 1618 extension and the 618 retracement are the targets and retracements that are considered to be or happen the most often. That's why it's called golden ratio. So let's go through a little further than what I'm talking about. Okay, so for our purpose in this group, you're not going to take every swing high and low and go, oh, that's A, B, C, D. That's bullshit. It doesn't work like that. It works if you can identify peak formation highs and lows and extrapolate the AB being 1 times ADR, the pullback between the 50 and 618, which would be stop hunt, and then continuation of the CD extension, which would again be 1 times ADR. All right, so for our purpose, the A point must always be a peak formation. the AB leg must represent 1 times ADR greater than 50 pips. Usually you'll get a push above the average, right? Think about this for a minute. Think about how my stuff plays out. Let me grab another pen over here. Every time I change the slide, I lose it. Sorry. All right, so, right, here's what I'm talking about. You have the moving averages, the 50, right? Ketchup and mustard. Price must come in off of a peak, cross over the 50, and then what can you expect? It's going to come back in here somewhere around the 50 as a straightaway or slightly below the 50 and throw a pattern, right? I found more often than not that this number of the AB leg is about a 50 to 618 retracement by just going back and looking at it. The stop hunt should find support a lot of times on the 618, or what it does is crazy. It throws a hammer like this, slightly below, and comes into the 618 and then goes out of there. Now, I'm not telling you to grab it on the first resistance candle you see or support candle you see on the 618. I'm just telling you that instead of waiting for a good opportunity or staring at the charts for the opportunity to present itself, you're going to have an alert with the box that will tell you, hey, price is in a range where it should be of interest to you. Again, the stop hunt is representative of the C point, which is going to be right here. We're projecting the D to the top side in this example. The CD leg is projected range in pips that we can expect it to move. Well, gosh, they've been moving fantastically. So if you get the AB leg of 100 pips, then your target top side should be 100 pips if you catch very close to the low of the day. If you're off the low of the day by a few pips, then adjust it down to 80 pips or 75 pips as your target. Okay, hope that makes sense. Here's another sketch of it. A little clearer. This is what I just drew for you. Okay, so here's what we got. Here. This is my drawing. Take a look at this. Peak formation must always be the A point. 1 times ADR, which will, in essence, cross over the moving averages. The B point in this example will become the low of the day, right? LOD. C point will be the retracement. Understand, off the LOD, into consolidation, encompassing the stop hunt to the high side. You still got all your technicals that I talked about. Your 3 pushes to that high, your reversal, above the ketchup, below the ketchup. And a perfect safety trade, obviously, would be the W. And then we can expect 1 times ADR down to D, which is to take profit, to end the day back in consolidation. All right? I hope everybody can see that cleanly. Simple, simple way to apply this. Okay? The concept is using common Fibonacci numbers and a very popular pattern. We can pick off safety trade entries with relative ease. Something that, prior to me speaking about it, required a lot of time in front of the screen. Some of you guys have been kind of doing this. I had an idea. Well, I want to make it official and let's apply it. So, again, we're looking at the ranges. If you have an 80 pip ADR, you can expect 80 pip projection on the other side, providing you catch a reasonable price in here. Okay, if you catch dead low, which a lot of you are capable of doing, then you'll get the full 80. If you catch, plus 15 off a dead low, then you need to subtract that number into the ADR range for your target top side. Understand that? Whatever number it takes you to get off of the 618. Let's say you get in, it goes 618, it comes above, and you're plus 10 from the 618. Okay, well then you need to subtract that from here and take it off of your target on the top side. Hope that makes sense. It's oversimplification. Now, I don't need any disrespect or to insult anybody, but I want to make sure you understand. All right, so in order to help capture the C point and be alerted to a potential safety trade, I had Joe create an alarm box that can be traced over the trading zone on the chart and alert us to safety trade development. I've been working on this for quite a while, and I don't want to keep bringing this up every time you guys hear from me, but I had it developed over the summer, and I had some personal things you guys know about. And that's why it got delayed. But it's ready for use now, and I'm going to show you how to apply it and the possibilities of what it can do for us. All right, so take a typical chart, right? You have your AB move, right? Your C pullback point, and then your projection to the D top side. Right? In this example, you have a double bottom peak formation low. Price moves 100 pips, pulls back into the zone, and then projects out the same 100 pips. Measured move, common stuff that's been around that, of course, I can't take credit for. But that's what we're looking at. We're looking at a way to extend the move. Okay? Once your AB point is in and it starts to retrace, possibly falls below the average and starts to drop, or comes off the high of the day and starts to get into consolidation and gives you the stop hunt, your trading zone can be drawn around an idea where you expect the C level to come in, and just make the projection. Okay? There you go. All right, perfect example. Here is your peak formation high, end of the day. Price goes down into consolidation. Okay, retraces back between the 50 and 618 zone. Finds tremendous resistance right at the top of Asia and at the 618. Nice confluence, and it holds for how long? Into London. 1, 2, 3, 4, 1 hour. 1, 2, 3, 4, 5, 6, 7. About 2.5 hours holds the high into the shadow box. You got to figure there's no more that this area is blocked volume by the dealer, and he doesn't want any more. Remember the hand? The hand did its number yesterday. All right, here's my bad drawing for you guys for the day. This is the bad drawing of the week. All right, I don't know if it's a cat claw or a human hand, but you already know what happened. The dealer grabbed the cash, and he snatched it away, and he ain't coming back, baby. And this is exactly where we expect a milder stop hunt on the straight area of the chart. And if you find resistance at the 618 in our box zone, this would give you good resistance and a good place to get short on the chart. You could even wait for it to close below to catch up, applying the rules that we've been using since the beginning of time here today. All right? There's your nice spike to the downside, and you are out with a measured move, all right, equal to this, maybe greater. All right, so maybe as part of not being afraid is helping to dissolve some of that fear. Maybe having a projection or a measured type move would give you the confidence to hold on a little longer. You can also do an abbreviated measure move. What do I mean by that? You can take 75% of the measured move. Okay, or if you want to get one crazier, you could do a 61% of the measured move. Right? Back to the 618, the golden ratio. What you would do is you would take a projection of the high and a 618 of the entire move, which in an example, if it's 100 pips, a 618 would be about 60 pips, right? Minus the spread. So that would help you hold for the targets. This might give you a little more confidence instead of clicking out with 20 or scratching out early on something that ends up going into or beyond what you thought the takeoff should be. Okay, I was asked the other day, am I trying to get more than 50? The answer is kind of still yes and no, man. I got in on an EU trade yesterday. I don't know if you guys saw that, but it was 4 hits to the bottom after that big double top high. And it came down. It was laying flat like a board right on the low. Well, the 4th time it got pushed out of that area, I kind of grabbed it, went long. And I went for 50 pips like I typically do. And then sure enough, 5 pips later, 6 pips later, price threw the hammer to the top side and reversed and dropped all the way down. It's working its way back up there. But you know what? I'm out. I'm in profit, and I'm done. And it's like 4:20, 4:30, first half hour of the session. And you can't argue with that. Done for the day. I have my 50 pips in the can, and I'm happy. Some of you, though, you treat it like a regular 9-to-5 job, and you're not happy unless you're putting 10, 15, 20 hours in front of the screen. That's something that I can't help you with. That comes from how we're all ingrained into a working mentality of putting in 10 hours or sitting in front of the screen hours to make yourself feel productive. That's not what this business is about. I've said it from the beginning. The whole point of the business is time, freedom, and leverage. By using more contracts and being accurate in your trading, you're allowing yourself to generate the kind of money that takes a team of regular workers to generate. It's possible for you to generate that stuff by yourself. But again, it comes down to the preparation and understanding the basic stuff that we've been talking about here as a group for the past 2.5 years. Okay, let's look at another example, another chart example. I'll show you where the box comes in place. Okay, so here we go. Here's our measured move, right, down in here. There's the blue box where you draw it. Draw it a pip or two below, a pip or two above the 618 and the 50 area. Price spikes in there, drops in, and gives you a consolidation area and falls below the Asian numbers. This is a 100 pip move and a 100 pip measured move the other way. Okay, it's an easy way. This would be an abbreviated exit. It's an easy way to grab decent amount of pips without fear. It should help you overcome some of the things that have been holding you back. That's the whole point of the exercise. One more to the top side. Okay, price comes in. Look at the separation on the averages. All the stuff I talk about applies, man. Don't start making up new shit because I put some lines on there for you. Start saying like, oh yeah, look at this. I can start doing these things now. Look, peak formation, low. Price moves up 1 ADR. It crosses over the averages. It comes back below the averages and works its way around the 50 and 618. It takes off. That's the kind of stuff you're looking for. Another example. Okay? Vector to the low. Look, vector to the low. Separation. Ends the day off. Goes into consolidation. Never gets below the Asian numbers. Remember why? Dealer's got it blocked. The area is trap volume in here. He's not coming back. He pins in it a little bit. And then he crosses over. There's your entry here on the crossover. Or close above the catch-up in here. Either one. Either one's acceptable. Right? The difference is your risk is going to be a little different on this one versus this one. We know we always want to try to get our stop outside the dealer's reach. After he pins this, that could be considered a mild stop hunt. You're looking to get long in here or a break above here. All right, car always waits for the pullback. My lines are getting out of control, sorry. Car always waits for the pullback into the candle before he gets on, and that's fine. And this wouldn't be a bad exit in this example because we know that we're going to see some type of rejection at the mayonnaise. Then you got hit the stops, rise, right? Typical stuff I always talk about. Trap, pull up, hit the stops, rise, hit the stops, rise, hit the stops, rise. It's in there, man. It's in there every freaking day. And if not, damn near every freaking day, right? I'm trying to curb my language for you guys tonight. Got some complaints last week. All right. How to set your fibs. If you noticed, I have double bands of fibs. Take a look. 2 sets of bands. All right, I got bands here and the bands here. So here's what I'm looking for. I'm looking for a 50 to 618 retracement. So what you do is open up your fib thing, and if we need to go over this next session to set it, just send me an email and tell me, hey, I'm retarded, I can't figure out my fibs. I'm kidding. Don't you guys write me emails about my language. All right, I'm kidding. So listen. Set your fibs at 50 and 618. Delete the other ones in between and above, and then set the 88% and the 100%. Okay, what's an 88 to 100%? Well, you're going to have 2 ranges. You're going to have about a mid-range retracement or a full double bottom. Right? If price comes into a double bottom, that'll give you a rough idea where to get long. You can add one more fib, which would be 107%. That will give you a stop loss level. Excuse me. Okay, try those, set them up, see what you think. Now, is it that simple to start drawing lines on the chart? No, here's what I want you to do. I want you to go back and apply these boxes to some past examples. Yes, I'm asking you to do homework. I know how you guys hate that and start cursing me under your breath, but are you going to just take my word for it because I drew it up there? Yeah, I know. Some of you have busted my chops. Okay. Just take my word for it. I did the research. Why should you? All right, good one. Listen, me and Joe went back and checked this stuff, and it's there. It's real. It happens. But how can you have the confidence and rid yourself of the fear if you don't prove it out yourself? If you don't take the time to go back 6 months on pound dollar, euro yen, stuff that you like to trade, and prove it out for yourself that these safety trades come into these zones on a consistent basis, in addition to all the things that I've mentioned, the AB move, the consolidation off the high of the day, stop on low rise. This should be the zones. This should be in the zone. Understand that you're never going to rid yourself of fear until you prove these concepts out for yourself. Prove that I'm not crazy, prove that I make them up, that I pull them out of my ass, all the things that have been said about me for the last couple of years from various people. The only way to build confidence and strength is to apply yourself and go back and prove it out. There's no other way. Okay, so